Um, Welcome. The Savage of Wall Street. We are on live now. And so I bid you a good afternoon wherever you're watching from. Beach Boy, I see you're on right there right away. What's up, my brother? How you doing? I hope you're doing well. Um, what a day in the markets, right? It seems like everybody was expecting, I guess, to have a bullish um day, and it turns out that no way. It was kind of a bearish day, right? We started off the day with, I think, kind of a negative perspective on how things were gonna go, right? Because of the um, of the words coming out of our executive saying that they're pretty much going to make sure that NVIDIA does not do business with China as far as their chip, and so it's going to eat away at $5.5 billion of the revenue that Nvidia has. So Nvidia is the giant of the market, right? I think Nvidia moves markets. I believe Tesla um, moves markets. Let me fix this a little bit. And so we started off kind of iffy, right? The market was choppy pretty much all day. I guess people were waiting for Rugman to speak, aka Jerome Powell. And so he spoke, and the overall market told us exactly how it feels. And so if you watched my video on Sunday, you know that I called for a bearish week. I am calling a bearish market. We've been in a bearish market for a few months now. I do know that we had one day last week where everything was, all pies in the sky, and, vanilla and potpourri in the air. The birds were singing, sun was shining, people could stop and smell the roses. And so what happened? Well, nothing happened. This is just more of the same. And that's kind of what, this week has been showing. It's just more of the same from last week. I've been calling for people to tune in, and I'm trying to show people that it is wise right now to take some good positions. If you are an options writer, I suggest that you start doing your cash secure puts kind of far out. I've said it once and I've said it again. When people ask me how I'm trading, I tell them I'm long on puts and I'm kind of short on covered calls at this moment, because covered calls are kind of, how you cover your ass, right? Especially during choppy markets like we have right now. And I believe for the next few years, we're going to have a very tumultuous um, and crazy volatile market. It's just the way it is. You can fight the Fed, you can fight the market, you can try to think that you're smarter than you are, and you're gonna end up getting, smacked in the ass. So I take what the market gives me, and that's pretty much what I preach, right? And before I get ahead of myself, I would like to show you guys that I do have something on the wall today, and that's kind of you know how I feel the market is going to be, for the next few. It's bearish market, baby. So I figure, you know what? Let me start using some of the some some of the art that I have around, right? So that gives you guys a better perspective on how you guys think I'm feeling, or how you guys can get a better insight into how I'm feeling about the market. So how about, whenever I can remember, as much as possible, whenever I feel that we're gonna be in a bearish market, you guys will see this. Whenever I feel that we're gonna be in a bullish market, you may see something different, right? But however, no matter what happens in the market, we're going to have the avocado show up every so often. So, you know what I mean? It is what it is, and this is what works. And I think avocado is for green, just so you guys know. We're always going to have green, man. I was reading something, on the Wall Street Journal today about some person called the Super Condor Man or something like that. It was I don't know. It's lost in the ether because I read so much and there's a lot going on in my life, especially with my 3 kids. But anyways, this guy is called Mr. Iron Condor or something like that, and he gets people to trade and kind of gives people what he's an outlook of what his trades are, and they do iron condors, right, which means 2 call strikes, 2 put strikes, and that's how he makes his money, right? It's just a way of investing. Nothing wrong with that, but I don't think this is the right way to go about investing, especially in such a volatile market as it is right now, because everything can move 15-20% in one day, and next thing you know, you get your tail caught on a door in a vice, and then you won't be able to get out of it, and you could double, triple down, quadruple down, and it won't be good for you. So it's a good way to lose money. What I like to talk about, and the way that I like to invest myself, is by basically having the stock as collateral. It's the most conservative way of investing. And if you've been investing for a little bit, you know that the amount that you can outdo the market, the percentage you can outdo the market by is quite a bit. So some people will outdo the market by 10 percent points, right? By 20%, 30%. Some people I know have outdone the market and outperformed it by 80%. So you tell me if these numbers are not good. A bank will give you 1%, 2%, maybe 3 or 4% on a CD. If you go and put your money there, this is much better, right? People are always asking, what's the best time to get into the market? Right now. I think that billionaires are made during bear markets and millionaires are made during bull markets. So that just tells you right there that there's way more opportunity during a bear market than it is a bullish market. But let's see what we got going on here. See if you guys have some questions. Beach Boy, Savage, you beast. What's up, Beach Boy? Hey, thank you for watching, man. Oscar Davila says hi. What's up, buddy? Beach Boy, Uncle Bruce doing his prime time thing now as well. Split screen time. Oh, snap. I didn't know. Oh, shoot. I thought he goes on at 5. Damn it. Well, tell him I say what's up. Ah, man, it's Wednesday, huh? For some reason, I thought it was Thursday. My bad. Oh, man, I'm going to make this quick. Ricardo Canales says bear. That's a bear. We're in a bear market. You can try to deny it all you want. Won't happen. We're in a bear market. You can try to fight it, but you can either get mad, you can either look at your portfolio down 30-40% and just get angry and then think about where you went wrong, or you can be proactive and do something about it. You can make money, right? How? Well, the stock market is going down. Why don't you use your stock as collateral, right? Do you have some NVIDIA? Guess what? You can make money. Do you have some Tesla? Guess what? You can make money. Do you have some Unity, some Microsoft? Do you have some Facebook? Do you have Salesforce? You can make a lot of money. The question is, do you want to be proactive, or do you want to wait for the market to go up and hope and dream that, you can then sell at a 52-week high, which I'm telling you right now, it's just not looking good. Based on, the meeting that Chairman Powell had today, he said it himself. It's going to be a challenging scenario for the Fed with all these tariffs, right? The tariffs are killing any type of future plans that any CEOs have when it comes to their business or their company, right? If you don't know what the goalpost is or where the goalpost is, you can't prepare, right? If we don't know what the number, if the real number that you have to adjust your numbers by, if you don't have a number, you can't adjust. You can't just wing it. There's already talks in on Wall Street about, big corporations starting to fire people. They're going to start laying people off. They're going to start tightening their belts, and revenues down. A lot of companies are starting to come out with their quarter ones at this point, and they're showing that, forward guidance is low. For the first time ever, some companies are coming up with two different quarterly earnings. One is in case we have some type of clearness as to what's waiting in the future, and the other one is we don't know, so we're gonna wing it. I mean, that's literally what they're saying it, and it's sad because the market does not like uncertainty, right? Anyways, look at what's happening, man. Temu, Shane are slashing digital ads as far as these tariffs are ending cheap shipping from China. So even people that get stuff shipped from China on the cheap are going to start paying a lot more. So what does that tell you? That tells you that the spending is going to be down. I mean, spending is down now. I was just reading some reports on that they did, I think, on Market Watch, where they interviewed families and they said, "How are you preparing, for the future, for the next few years?" And people are actually talking. These are dinner table issues that families are sitting down and saying to their kids, "Hey, you guys are not going to have a summer camp. You guys, we're not going to be able to have a family vacation this year." And it's pretty sad because these are self-inflicted wounds. This does not have to happen. But we are where we are, right? How can you cover your ass when it comes to that? Sell some covered calls, right? I see you, Hockey Rink. I see you. Bear, baby. This is it right here. There's your avocado, my mans. Give me a like now. There you go. So, again, the Bears right here, baby. Bears are going to run the table for the rest of the time. So, what are you going to do? How are you going to make money in this environment, right? Guess what? There's a way. Do you have at least 100 shares of Tesla? Do you have at least 100 shares of NVIDIA? Hell, it doesn't even have to be an expensive stock. Do you have 100 shares of SoFi? SoFi is like $10 a share. That means $1,000, right? Do you have 100 shares of Rivian, SMCI, of C3Ai, of Microsoft? Do we have 100 shares of Open Door Technologies, of Netflix? I mean, wherever there is 100 shares, there's a possibility to write a covered call, right? Now you're entering the options market. And that's exactly what I like to talk about on my channel. Is this channel for the novice trader? Yes, it is. I can argue that I can talk to someone right now and tell them, hey, are you thinking about investing? Do you have a couple of $100 in your pocket? Cool. Open up an account with Webull or with SoFi or with Robinhood. Maybe SoFi, not SoFi, because I don't know how their options are trading at this point, and maybe we want to hold off on that. It's a little more intricate, but definitely Robinhood and Webull, right? Do you have at least 100 shares of Robinhood, of Webull? Webull just went public, but do you have 100 shares? Well, guess what? You can now use those shares as collateral and get paid to hold them. And in case it goes down, guess what? You just made money. In case it goes up, guess what? You're going to make money. And it's that simple. How simple it is? Well, say this guy right here is 100 shares of SoFi. SoFi's trading, let's just give it a $10 price point for this minute, right? So $1,000, you have 100 shares of SoFi. Boom, here it is. I'm willing to sell my 100 shares of SoFi, right? 2-3 months from now to the market, but I'm going to write a contract. That's an option, right? So what do? I go to the options chain, I go to, sell, or, I don't know what it looks like on every single one of these stockbroker apps, but for the most part, on Robinhood, it says sell, right? So you hit sell, and it gives you a little, option of, what do you want to sell. So it says options, buy, sell stock, trade. And so you go to options, right? And then you go to the options table. You say, hey, I want to go to June, and then you pick, June. You go to $11 strike, the $11 strike, and you say, hey, these are my 100 shares of SoFi. I want to sell it for $11 in June. And guess what? It's going to give you an option of a bid ask, which is kind of like someone's bidding. This is what I'm going to pay, and someone's asking, hey, this is what I want to get paid. And you say, for argument's sake or for teaching's sake, say $1, right? So you're asking basically for $1 per share. That's 100 shares, right? So that's $100. So you're basically asking the overall market that you have SoFi, which it costs $10 to this point. You're saying you're going to sell it for $11, but you want to get paid $1 per share, which is $100 right now in your pocket. That money's yours. Boom. And somebody in the options world that's a gambler, which is we call degenerate gambling, addicted, silly rabbits, right? These guys are going to say, you know what? I will take that because I think SoFi is going to be $12 on that day. They have earnings coming up, and basically what they're going to do is buy that option, the option to the rights of 100 shares, and they're saying, sure, I'll give you $100. So they give you $100. That money's yours. Now, in June, let's say SoFi is like $10.95, $10.45, $10.50, doesn't matter. It's under $11. Guess what happens? You already got paid $100, and that option dies worthless because you picked that date in June. On that date, SoFi is not $11 or more. So guess what? You keep that money. You keep the $100, and they return you your shares. You use your shares as collateral to make bread, right? Those $100 you could use to pay your phone bill. Guess what happened? You just made income, that you use to supplement, your paycheck, and used it to pay your phone bill. So you have one bill less, and you were able to use your collateral, which is your shares, to make your life easier and alleviate financial stress. Congratulations, you're an option writer. Boom, that's simple. What happens if the shares are $12, Savage? Well, guess what? You basically said you're going to sell for $11, right? So you're going to get paid $1,100 on that date. That's $1,100 in your pocket. You made 10% on that investment. But wait, don't forget the $100 they gave you for the contract. That's $1,200. So you made $1,200. So guess what? You invested $1,000. You made $1,200. You just made 20% in a year. In a couple of months, you made 10%. No bank is going to give you that. No bank is going to give you that. And you just outperform the market because the markets on average go up 8 to 10%. Guess what? You're an options trader. You're an options writer. You just beat the market. Thank you very much. Give me my money. What happens? You get to $100. They take your shares. No big deal because you like SoFi. Now what can you do? Well, let me tell you, buddy. You can now, if SoFi is at $12, say, you know what? I like SoFi. I want to buy it a couple of months from now, but I don't want to pay $12. I want to pay $11. And so you take $1,100 of your $1,200 that you have, and you're going to put it in, on your brokers. You're going to give it to them. They'll put it somewhere in a magical place. And then you say, I want to get paid $1 for my troubles, for buying SoFi at 11. Because I'm basically telling you, here's the $1,100. I'm basically making sure that I'm serious about this deal. I'm going to buy 100 shares of SoFi for $11, not $12 today, but for $11. But I want to get paid $100. And guess what? Somebody in the world of options is going to say, I will take that bet. They will give you $100 to sell you SoFi at $11. They'll give you $100 to sell you SoFi $11 in the future. And if SoFi is $10.95 or $10.80 on that date, guess what? You have 100 shiny shares of SoFi for $11. But guess what? You got paid $100. So you realistically are buying them for like $9.80. Boom, you just made money. Guess what? You're an options writer. And guess what? If SoFi is for whatever reasons, right, 11:10, 11:01 on that day, they return you your $1,100. Guess why? Because nobody's going to sell you some stock that's $11, 11.05 for $11. They'll be losing 5 cents, right? And so they're not going to do that, but they'll return you your money. And guess what? Now you can rinse and repeat. You can go a couple of months out and you can say, I'm going to buy SoFi again for $11. Give me $100. Boom. There it is. Options writing made simple. Now, does it get more intricate than that? Yes, it does. But you know what? Let's keep it simple, right? That's just the way that things really work. People try to make it sound a lot more convoluted because these dummies that go to Harvard and Yale and Columbia and UPenn, they got to justify paying $100,000 a year, right? And so they say this is a lot more intricate than it is. It can be when you start talking about derivatives, but really, it's not. It's that simple. And if you just have 100 shares of a specific stock, you can do this. Can you do this a lot? You can do it as many times as you want. You can actually do this for a living. There's a lot of people that I know have left the workforce because they decided to take their portfolio with them. They had, 10,000 shares of NVIDIA, and they had, or 5,000 shares of NVIDIA, and like 1,000 shares of Tesla, a couple of hundred shares of Microsoft, some shares of Google. And now they do this monthly. They basically sell covered calls, which is options, to some gamblers out there, and for a living. And they bring in, several thousands of dollars a month. Some people over $10,000. You can do this for a living, absolutely. Now, am I saying you should leave your job and, F it, go crazy and become an options writer? Absolutely not. Don't be stupid. And this is not a knock on anybody else that's saying that you can leave your job. You can, but you have to get good at it. You have to do this for several years, and you have to actually have a portfolio, right? Now, this is exactly where people go and get scared, and they say, I need $1 million to get in the stock market. Like, no, you don't. You really can start off with $100 or less. There's some shares that are worth 60 cents, 70 cents, 80 cents, $1 of different companies. In these companies, you can write an option in, right? Covered calls. You can also do cash secure puts. There's a strategy called the wheel. I suggest you look it up on YouTube because I don't want to go and get people confused. But I wanted to just make a case that in 5 minutes, I can teach someone how to sell a covered call. Now, whether they want to take the plunge or not, that's a different story. And if you want to get cute and think that you're better than you are, you're gonna get your ass smacked. Don't. Keep it simple. I'm not an intelligent man. Actually, pretty dumb. But I do know that if you are good at one thing, and this is the samurai in me, I'd rather be good at one thing and practice that one thing 1,000 times a day than try to be good at 1,000 things and practice it one time a day. I don't know if you guys follow, but that's exactly how I see options. I know I can do iron condors. I know that I can do I can do puts and I can do calls, and I can do all types of different scenarios, right? You can really get intricate with these, but if you keep it simple, right, you're gonna be okay. Now, are you gonna at some point get your hand caught in the cookie jar? Yeah. You're gonna at some point you're gonna see the market go against you, and you're gonna be like, oh well, that sucked. But tell you what, 90% of the time when you are an options writer and you sell options, right, you're in covered calls and cash secure puts. 90% of the time you're going to win, and that's exactly what you're trying to do. You're being the casino. You're using your options as collateral, and you're trying to make income with your shares of whatever companies you hold as collateral. And that's as simple as it can get. That's as simple as it is. You just have to take the plunge, and you have to say, hey, I want to take my future in my own hands. I don't think I want to pay some dumbass, you know, 2% of my overall portfolio. Whether you make money or not, you're gonna pay that if you end up investing and going into like some big outfit. And if you become a gambler, I know there's a lot of people out there that are saying you should, get in the options game, and they say buy options, right? Buy some calls, and you can make a lot of money like that. Yes, yes, you can make a lot of money like that if you know what you're doing, and it takes years to figure it out, as well as the market goes against you all the time. So just like you can make a ridiculous amount of money, you can also lose a ridiculous amounts of money very quick, and that's exactly what I'm trying to keep people from doing. Like I said, I saw this thing called Captain Condor or something like that, and I chuckled because I read what the guy does, and his strategies, and in order for you to be part of his team, right? I think he's on I don't know if he's on Discord, he's on Slack. He actually charges people a big premium to be part of his Slack, and they follow his trades and they kind of copy him, right? But he also wants people to have at least $26,000 in a portfolio so that they can um, know what his trades are. I think what he's trying to do is he's trying to keep from any type of outfit or stock broker from uh, pattern date trading issues, because pattern date trading issues, because that's what the number is when it comes, I think, for Robinhood and for Webull, is so that you are not basically red flagged as a pattern date trader, and also it gives you more leeway when it comes to getting out on margin, going on margin, right? And that's something that I absolutely abhor. I believe in having a portfolio that is cash only. Not saying that I don't go on margin, I do, but it's usually to buy back covered calls that are like at 60 or 70%, and I'm light on cash, or to kind of sell cash secure puts, and then that premium I'm able to use to kind of cover. I don't know if you follow, but there's a little more intricacies than that, right, to this, but for the most part, I don't like to be paying an interest on money that I'm generating, because it's not real, right? It's just playing with house money, and when you get greedy, or you start going and playing with house money, anytime the market goes against you, you're more likely to get a margin call, and you can get in trouble very quickly like that. And since I don't want to do that, and I'm very conservative, again, my approach is one of the most conservative ones, and it's not to say you can't make good money. It's just conservative because what I'm doing is I'm basically hedging that I am buying an underlying stock at a specific price point, and then automatically I'm then selling it for 10 to 15 to 20% more in the future, and then I'm getting paid for that. Now, if it sells in the future, great. I made 15, 10, 20% on my investment, right? But I also keep the premiums. And if I don't, guess what? Then I keep the premiums, and then I'm able to buy shares with that premium at a less price point than where I began, thus averaging down, and I'm now adding shares to my portfolio. And that's how conservative I am. Now, I'm always, I get paid a specific amount of money every month, and I always take a bit of it and I invest it. That's just the way that I grow my portfolio. And sometimes I do it by, mainly selling cash secure puts, or if we're having really, 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 really bloody weeks, I go at market price and I average down. And then, if I have no covered calls sold on that specific underlying stock, then I'll go in the future, 3 or 4 or 6 months out, and then sell. Now that my average is lower, sell at a higher price point, and bring in more premium, because the more time I go out, the more premium I can bring in, and that's just the way that it unfolds, right? Anyways, I just this anybody that's beginning to trade that just watch this, that's the best and easiest way that I can make it, right? I'm sure there's somebody smarter than me that could probably um, explain this in a lot of a layman's terms, right? And faster, but that's just the way that I think it's easiest to explain. Um, but end of the day, today when it comes to investing, as far as actually today's market, hey man, so we're down 2%, 2.5% on the S&P 500. We're down 700 points or 1.75% on the Dow. The Nasdaq is down 3%. The Russell 2000 down 1%. But guess what? Gold is all-time high, baby. So people are scared right now. Smart money is actually kind of in the peripherals at this point. Smart money is very nervous. And what I mean by smart money means extremely wealthy individuals, right? Or outfits that manage billions and billions and billions of dollars. They taken money out because they perhaps sold into strength a couple of months back, and now they've been nibbling, but not as much, and they're nervous. They don't want to take the plunge because there's so much uncertainty in the market, right? And the market just doesn't like uncertainty. Bottom line, Powell just said that it's going to be challenging this year, and I called already for 4 um, uh, rate cuts, but I think they're going to wait to see what the next month brings, right? I honestly think that in the next few months we're going to have a pretty nasty downturn in the economy. And once that happens, they're going to have no choice but to step in. And I see 50 basis points get cut, consecutively. I definitely see that. And I think that's going to give the market a little bit of time to breathe, but it's going to be too late, right? However, you can absolutely start taking positions right now. When everyone is scared is when you should be greedy, right? Warren Buffett says that. He says when everybody's scared, be greedy, and when everybody else is greedy, is when you should be afraid and scared. And bearish market, baby. Bearish market. I mean, I don't know what else to say. It's just, Netflix is going to have their earnings soon, and so they think it's in a strong position. I happen to think that Netflix is just way too expensive at this point, and it's yet to be seen, right? The way that these interviews that I read on Market Watch unfolded, it seems people are going to be cutting costs, and I think Netflix could be a cost. It used to be cheap, right? $7, $6, but now it's like $20, and they're thinking about making it even more expensive and charging a premium for no commercials and stuff. So, you're getting somewhere where people may be like, yeah, you know what, I may cut Netflix. They may go with a cheaper option. There's a Hulu that's cheaper. I know there's Hulu that's an option. There's Disney Plus, and there's packages, right? Netflix doesn't have a package. I know that the Disney Channel and Hulu and ESPN, they have a package for 3 apps you pay, I think, like $19.99. So you're paying $20 for Netflix by itself, or you could pay $20 for their competitors. So that remains to be seen. See, what do we got here? Hockey Ring saying, "Where's my avocado?" I show you your avocado, brother. That's right. Need some guac. It's Ryan. What's up, guys? At work, 12 hours in the ear, so I have a lot of catching up to the day. So NVIDIA tanking, J. Powell, etc. Yeah, NVIDIA's, so this is the deal. I don't really think it was Jerome Powell as much as it was just the overall sentiment, right? And the kind of the news setting in that, Trump basically said that he's basically barring NVIDIA from selling their their chip to Asia, right, or to China. And so, that's a really big market. That's a $5.5 billion contract that they're going to get hit on, right? And so that's where are they going to get that from? It's a really big market. Where are they going to get it from? And so revenue is going to be down, and so now the market has to price it in. Now, can there be changes in the future? Of course. I think this is kind of like the ultimate back and forth between, the executive branch of the United States and China, and they're using kind of NVIDIA as a pawn, right? They're going to use it kind of as like a starting point. But China already said, the USA has to call, and they have to be respectful. And I don't think that's much to ask. If you have the overall economy and the overall economy's health of the world in the balance, why wouldn't you want to have some good faith diplomacy going on, right? I don't know. It's just the trade war is rippling through the business world, and it's gonna keep on hitting stocks, and it's just gonna be pain. At this point, it's just a matter of where do people feel comfortable buying a stock, right? So NVIDIA is, at this point, $103. I'm calling it now. I'm saying it's going to $75. I called 90 before these news hit, right? I said before the end of the summer, NVIDIA is going to hit $90. That's where I saw it, and it did. It went below 90. Now after these news and you've seen how jittery the markets are, Jerome Powell's answers today, I see NVIDIA in the $75 market, guys. I see it there, and I'm going to bite the bullet on this one and not buy anything right now, and I'm going to wait until it's definitely sub 80. If it hits 79, 78, it's going to 75. And so at that point, I'm going to take a nice position again and average down on it, and keep selling covered calls. I sold some NVIDIA covered calls, I think like last week, right? When the stock market had that day on Wednesday. Actually, just a week ago. It seems like such a long time ago, but it really was just a week ago. And I sold a $150 cash secure put. I'm sorry, I sold a couple of $150 covered calls, and I sold a $100 cash secure put. The point of the matter is that the covered calls that I sold are down like 50% at this point. So what are we going to do about it? Nothing. I'm going to cross my arms. I'm going to get wealthier by waiting, and that's the beauty of the of covered calls, and the beauty of cash secure puts is that you're literally getting paid to wait. The clock is your friend, your ally, and that's the gambler's enemy. Especially short weeks like this week. Instead of 5 trading days, you have 4 trading days. I think there's a few more 4 trading days in the next month or so, and beautiful to me because that data decays so quickly, and at this point, I'm just gonna let the clock make me richer. Whenever I do decide to go and buy back those covered calls, it's gonna be probably at 60% or more, and then I'm going to write, instead of 150s, maybe 110s, 120s, and out to like March of 2026. And that's, I was at January 2026 with these last ones. I want to go to March, and then for 11 months, try to get paid at least, I don't know, $1,200. Maybe $1,500 per covered call. Nothing wrong with that at all. So what am I doing? I'm basically saying, hey, the stock is here. I'm comfortable selling it up there, but give me money. And at the end of the day, NVIDIA is going to be back. NVIDIA is going to do well. NVIDIA is NVIDIA. GPUs are leading the market. Um, they are they're the company, right? And so I just don't see them uh, having someone else come in and take their market, right? No AMD or Taiwan Semiconductor. It's just not going to happen. NVIDIA is NVIDIA, and it's the monster of the market. But there's this thing called contagion, right? When it comes to investing, and right now everything is down. Like I said, smart money is in the sidelines, and so what are we going to do? Um, just wait, But for the time being, get paid to wait. Have those shares pay you a premium. Pay rent. Think of the portfolio. I say it all the time. Think of your portfolio as a building, right? And think of all those companies you're holding as tenants. What do tenants have to do in a building? They gotta pay rent. So no matter who they are, no matter it's not personal. It's just you bought a building for a reason, which is to make income, right? So gotta make monthly income somehow, and so they gotta pay rent. That's just as simple as you should see it. Um, Now, when it comes to other companies I'm looking at, and just for the interest of people that don't know, right? And the interest of full disclosure, every company I'm talking about, I invest in, okay? And this is not financial advice. It's just me giving you information, and it's my personal opinion. Now, every company that I'm holding is a company that I'm willing to hold at least 5 years. Every company I invest in is a company that I've researched a lot. So if I'm going to put my money and invest it in a company, it's going to be a company that's going to be worth it to me, be worth it that I hold it for at least 5 years. I don't know if that makes any sense to you guys, but I'm an investor, right? I'm not a gambler. I'm not here to make a quick buck for the next month and then I'm out. I'm here for the long haul. I'm here to teach my kids how this is done. I'm here to teach people that want to listen to me and see these lives or these videos at some point and are curious on how to become wealthy using their own stock as collateral. More than welcome. And feel free to leave a comment. Some thumbs up would be cool, and let me know, if there's something you're in your mind. But again, I'm a long hold. All the companies I talk about, I invest in, and some of them are companies that you may have heard about. Some are not. I invest in Tesla and Unity, C3Ai, RIOT, ACHR or Archer Aviation, and SMCI, ASTS, GME is a beautiful one because it always it's like an ATM. A lot of people are like, GME, oh, that's a silly investment, but it's really not. It's a great investment. Anyways, that's it for today, knuckleheads. Thank you for watching. I wanted to come in for 30 minutes, but I guess it was just I got lost in the ether, right? And talking about this, I'm pretty passionate about it. But thank you for watching. I really appreciate you guys. And remember, cash is king, right? And chaos is cash, but credit is power. See you later, knuckleheads. Maybe on Sunday. Take it easy. All right. Peace.